A wrap of the business news of the day. I'm Frances Hurd, and tonight we're looking at the market and zooming in on one share in particular. Sasol has been affected by the economic fallout of COVID-19, which has led to something of a bloodletting, of course, across world markets, and it's also been hard hit by a recent oil price war. So let's look at Sasol. Let's look at the current share price and where it's come from as well. The petrochemical giant began the year, let's bring up that graph, at trading above 300 Rand or so per share. Now, Sasol makes synthetic fuel from coal, but it sells that in line with general fuel prices. So its fortunes are linked to the global price of oil. If the oil price goes up, so does Sasol, and vice versa. So it's been hit by a double whammy because amid the COVID-19 pandemic, there's also been that oil price war. In March, Saudi Arabia and Russia flooded the market with oil, which saw a collapse in the price of oil. Sasol's share price plunged by nearly 50% in one day. You can see that huge decline in March. And from 300 Rand, it landed up going all the way down to below 30 Rand per share. Shares are on the mend, though. Last weekend, there was a deal under the banner of the cartel of oil-producing nations, OPEC, to cut nearly 10 million barrels of oil production per day in May and June, the biggest cuts ever announced. And Sasol's share price has nearly doubled to trade around 60 Rand per day. That's where we land up on this graph. Well, Old Mutual Equities says that Sasol shows the importance of maintaining perspective in times of chaos. Let's speak to the portfolio manager and analyst Meryl Pick now. She joins us on the line. Meryl, thank you very much. So if you sold shares at 30, you'd now have to buy them for 60 Rand or so. So is that a lesson in sort of keeping things in perspective?
Good evening. Indeed. I think something like Sasol contains many lessons. I suppose it's going to be a business school case study for years to come, but also a case study for investors in holding your nerve and keeping a long-term perspective. I think when Sasol was reaching lows of 30 Rand, one would have to stop and think, what are the expectations reflected in this share price at this time? And make a call on whether those are too pessimistic, spot on realistic, or too optimistic. And our view at the time was certainly, even today, that the share price is still reflecting quite pessimistic expectations of the future. For example, to see an oil price of $30 per barrel prevail for many, many years, which we think is unlikely.
The share price is still markedly down on the year, though. You've got lockdowns around the world. The oil price going forward affected by recession around the world. So you really think things could actually pick up again?
Well, if you look at what COVID-19 has done, and I think this has precipitated the oil crisis that we're seeing. Had it not been for COVID-19, we probably wouldn't be talking about an oil price at $30 per barrel. So what has the outbreak and countries around the world, the response to the outbreak done? We've grounded flights. Shipping of goods around the world has dramatically reduced. Even just trucking and passenger travel around the world has dramatically reduced. Now, certainly that will be the case, and the economic fallout of all of these shutdowns has yet to play out and will be recessionary. But we are living in very extreme times, and we've seen oil demand fall 25 to 35%. That is not a normal recession. That is what happens when everyone in the world just stops, all at the same time. And I think those extreme conditions are the ones that won't prevail in the longer term, even if we do come out of this into a recession. As some activity resumes, you'll see some demand resume for oil.
So this is interesting because you say COVID-19 and the oil price war are events, meaning they will pass. That's what you're suggesting. Some people say that, hold on to shares. This is a buying opportunity. Others say the share prices are reflecting a world that has gone pear-shaped, that'll never get back to the norm again. Which is it?
It's, I think if we look back at history, there's always an event and a cycle. Very few times do things remain at such extreme conditions as we're seeing today. Let's go back to the Spanish flu. We saw similarly countries having to shut down, social distancing, very extreme economic impacts. But following that, we had the Roaring 20s. We had a 10-year bull market not too long after that. So these extreme corrections do create opportunities, in our opinion.
And it's interesting that Sasol itself may be taking the gap, saying it's formulated more alcohols because there's a need for alcohols in sanitizer. Is Sasol, in finality, still a good investment opportunity there?
I believe at the current share price, Sasol is absolutely a good investment opportunity. There's far too much pessimism priced in. It's assuming that we will never see an oil price recovery. And probably there's a large amount of worry about the balance sheet health of the company. And yet they have several levers to pull to actually strengthen the balance sheet, which should play out over the next 12 months and give investors that comfort that they're looking for.
Yeah, and Sasol is part of the bigger oil price story. What is your outlook for the price of oil? Given, like you say, planes are grounded, not many cars are running like they used to. Where's the oil price going?
So this is an extreme event which is causing a cyclical low in the oil market, in my view. And I think it's hard for me to sit here and imagine a world that we never fly again, we never travel again. So it's all then about investment horizon and how many months or years does it take for that to correct. But I think correct it will. So we will see a higher oil price. The other thing is that cycles and low prices actually sow the seeds for higher prices. What we also need to consider is there are many oil producers around the world that cannot make money at this oil price. So eventually, those suppliers are actually just going to withdraw from the market, withdraw their supply. Their funding will dry up. So Sasol carries a lot of debt, and that's part of the reason why the share price has reacted as it has. However, let's take the South African business. It can be profitable and actually does generate cash at the oil price we see today. Whereas in the States, in the shale fracking Gulf area, there are producers that cannot make money, that need a $45 or $50 oil price to make money. The longer this oil price prevails, those suppliers actually start the market and the supply and demand dynamics correct themselves. So one way or another, it will resolve.
All right, so optimistic about the future. Let's leave it there. Meryl Pick from Old Mutual Equities. And with that, let's take a look at the numbers. So I can tell you that the Rand was a little stronger at the moment. It is, but it's had a very rough week. And the JSE rose by nearly 2%. Now, markets around the world having a very good Friday. And that's on the back of reports that patients with severe COVID-19 symptoms had actually responded positively to a drug made by a U.S. company. Now, a lot more information still has to come out about the findings of the testing of this drug, but markets already reacting to the preliminary data. And of course, U.S. President Donald Trump also talking about slowly, gradually reopening the U.S. economy. Let's take a look at your main financial indicators.